Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. You have the Dow Industrials down 33, NASDAQ off 14, S&P's up. S&P's down 5.5. NASDAQ futures, they're up 2. Gold contract down $10.50, trading at $1,208 an ounce. Silver, holy cow, down 58 cents at $16.98 an ounce. Platinum down $7 at $1,299 an ounce. Copper down 5 pennies at $3 a pound. Now check this one out. Light sweet crude down $3.28 a barrel at 91.29. Bonds, the 10-year off 3 ticks at 124.22. The 30-year off 11 ticks at 137.31. And King Dollar up 319 ticks at 86.03. That was up 500 ticks at one point. Euro down 55 at 126, and the yen's trading up 18 at 109.67. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P out here today, low is 1968, the high is 1985. You're at 1973. I suspect this bounce isn't over yet. Market's having a hard time holding price, but I expect you're going to probably get a little more bounce. Larger, that's the smaller portion, shorter term portion. Longer term, next stop on the SPY is down to 190. I suspect we got the SPY get up to about it did get to 198.30 today. It can get to that price point again. I don't expect they're going to get over it. This is just a time deal right now, meaning that it's the end of the month today. You get the beginning of the month tomorrow. Dow Industrials is set up a really sweet ABC structure on the way down. I expect you're probably going to test this high of today once again. That was 17,145, but the setup is really sweet. See, the higher range, folks, is 17,151. Dow Industrials today, 17,145. It just can't get in that higher range. That's how that baby is set up right now. The NASDAQ composite, we go over to the composite, we look at the composite. Same type of setup. Composite was as high as 45.22 today, which, you know, you're down 12 now. At 45.22, bottom line, you would have been up 22. I suspect that can get back up into that level again. That also is coming into the downdraft, however, of the first 2 real fast days that we had on the way down. That was September 15th and September 16th. We look at the 3 Qs. We use the... There she is. We take the 3 Qs. We take a look at the 3 Qs. This is what you have with the 3 Qs. New sweet. You're up in 30 million shares versus the downtown out here of 68 million. And they really can't hold price. Inside the 3 Qs right now, what's putting strength into the NDX 100, you have eBay. eBay is splitting into 2 companies, PayPal and eBay. Wynn Resorts is up $8.96. That's quite a jump. This stock has got killed, but that's quite a jump. Man, that's volatility in spades. That is the second leader inside the NDX 100. REGN is up $5. That's one of the biotechs. And Whole Foods is up 53 cents. Taken away from it on the way down, you have Charter Communications is down 471. You have NXP Semiconductor, that's down 192. Vodafone is off 71, and Vertex Pharmaceutical is down $2.25. We look inside the Dow Industrials, strength versus the weakness. Visa is the strength inside the Dow Industrials. That's up 257. You have Coca-Cola is up 37 cents. GE is up 22. Walmart's up 35. Taken away from it is Home Depot is off $1.15. Chevron is down 145. Big Mac is down 109. And Boeing is off 135. Now, let's go over and we take a look. Let's go to the gold. What do we have with gold? Gold takes out its low of today. Right now we have let's see. So we've done 169,000 contracts out here. I believe Thursday was 185,000. Yeah, it was 186,000. The low of Thursday was 1206.60. We got to 1204.30. And at this point, you have lighter volume there, and it has rejected price. That's on the shorter term basis. The longer term basis, what you have with gold is continuing to do, and which silver is not. Okay, let's pull this up and we'll see how this shakes out. What you have with gold is that the first swing low in gold is 1179. That was the swing of the June of 2013. The second swing low out here was the 1181. That was December of 2013. In both cases, you're coming into those levels. So the bottom line is that, yeah, you can go down and test those levels. Silver market, this is pretty intense, man. Let me pull this up. Holy cow. SIZ4. So silver takes the deep, 60,000 contracts, always more volatile than gold, no doubt about that. We put this SI1, we'll put this on a continuous contract. We bring this back. Okay, so silver is broken, the 1818. Boy, that sets up a heavy scene, man. So the way the setup is on silver right now, you got, bottom line is that, this is going to be amazing, actually. Yeah, you get $13. It's wide open. 13, you know, you first stop 1430. You know, bottom line, though, is that there's not a lot there. Once you get into the $17 level, which we did, $17.80 to be exact, this thing can go to $12.20, which is pretty intense. If we go, let's go look at this SLV for a second. The SLV trades at 10% of the price of silver. Not 10% of the price, not like gold. Okay, let me put this up. I get a feeling that this thing is going back to 2008 when I was looking at this. So right now this is 1629. You've broken, okay, the swing point had 284 million shares. Well, thank God it's not an ABC down. So you've broken the swing of June of 2013. You haven't broken it with volume, however. You know, so the bottom line is that, you know, we'll see where that gets any support. Right now you're at 1624, you know, 1550, you might get something going. Some of the Dow stocks, you have American Express down 35 cents. You get Oxy. Oh, oil. We got to go to oil, man. This oil contract, holy cow. This is pretty intense. So you get gasoline. This is so beautiful, man. Gasoline is going to 225, which is just amazing. Crude oil. So gasoline, folks, unleaded is down 4%. Crude oil is down 3.5. Silver is down 3.3. When you look at this context here, gold's only down 0.8%. You can see that gold's holding it up. We get out to the oil market. We take a look at this oil market right now. It's down 333, and you get juice behind the move. 400,000 contracts. Yeah, this is going to be a monster ABC structure on the way. Well, we'll see how it takes out. Actually, hold it. There it is. It's a complex ABC. Yeah, this is an ABC down 85 bucks. $85 in the oil market. We take a look at the gasoline market, and of course we'll get our man Andy Hecht on here in the next hour. He'll explain what's going on between the oil and gasoline market. So the gasoline, this is intense. I've never seen gasoline down 10. Gasoline, folks, is down 10, almost 11 pennies. That's like unbelievable. Bottom line, this baby wants to get down to, let's see, so you got 290, 50, that's 40 bucks. Yeah, it's 235. We're going to 235. 235, 225 unleaded. That's a beautiful thing. The bonds, the 10-year bond, this bond, folks, is going to the moon. So check this out. 10-year bond today is down to a low of 124.16. Rejects that low. You're at 124.23. This is doing another ABC structure on the way up. Bonds to the moon, baby. Yields. Where are we at yields? Yields right now in the 10 years, 2.5. 877-927-6648. Dow Industrial's down 21. Nasdaq's off 10. S&Ps are off 4. Stay right there, folks. Coming back. Come right back.
Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials right now down 2. Nasdaq's off 4. S&P's flat. And listen, folks, this week we have a $10,000 trading competition on the Nadex platform. And if you have joined in that competition, folks, remember that all you have to do is trade each and every day that you have a chance to win one of $500 cash prizes. As you come over to TFNN, so yesterday was the first day of the contest, folks. If you come over to TFNN, you can see right on the front page, you'll see it will say leaderboard. You hit that, and you're going to see the leaders from yesterday. This is pretty impressive, too. This is a trip. So picture something. They started with $25,000. Trading one day. The top guy, woman, I'm not sure because we have first initials, is 25,000 profit. Second's 18, third's 15, 12, 9, 8, 7, 6, 6, and 5. They're all in a profitable position for the first day, so that's pretty impressive, and I want to congratulate all of them. We have 5 daily winners that are up there, and bottom line, folks, is that don't forget that you have till the end of today just the trade, and these 5 winners are randomly picked every day. And it's going to be intriguing to see what these numbers are from tomorrow, because what we will do is that we're going to see some heavy fluctuations in the aspect of who is jumping ahead, particularly because we get a dynamite market, meaning a highly volatile market, in order to basically trade. And in particular, what you have is this. So inside the currency pairs, right, folks, these currency moves, okay, so just check this out for a second, because the platform itself, I trade the platform is dynamic, but inside the platform and the currency moves, this is like insanity. You know, you don't get moves like this. Like the euro today, the euro moved from 0400 at 126.87 and just went straight down to 125.71. That's like insanity, meaning, you know, depending on what contract you're buying, there's big money there. The S&Ps themselves, same deal. So check it out on the front page of TFNN. And if you have joined the contest, make sure you trade every day, because the bottom line is there's 5 separate winners, $100 every day. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. Don't forget, you can get Basil's program every day right here, 11 to 12 Eastern Standard Time. In fact, you get all the programming at TFNN right on your cell phone, tfnn.mobi. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
Very good day. Thank you.
Cool, man. So what are we looking at here?
We're looking right now at the Dow.
Okay.
Dow. This is the Dow daily chart that I show my subscribers. This has still got today's comments on it. And what I'd say today, one of the reasons why I was expecting two things to happen. One is I have a technique that I call the Chapman Wave Trin Gauge. It basically uses Richard Arm's Trin Index, but there's certain numbers that I look at. Within that context, what I was looking at was that there was a very good indication yesterday that today there should be a move in the futures on the E-minis, that's the S&P E-minis, of about 7 to 9 points, and that should translate into a move in the cash index at some point. And later in the day, I said there should be a failure of the rally. One of the things I was looking at is in the monthly chart, because today's the very last day. In fact, we've got half an hour to go for the last trading half hour of September. And one of the things I was looking at was a potential for a doji-type candle. So let me show you what I'm looking at. There was inverted a candle on the 19th of September at 17,350, and that made a peak E in the Chapman Wave, the fifth highest wave. I called it a Chapman Wave right arm extension. What happens in the move like that is that one of the indicators, either the MACD, the moving average convergence divergence, or the slow stochastic, gives a sign that there's going to be a rally, but they don't both confirm. And in this case, the stochastic failed quickly, and then the MACD turned down. And what we've seen is the Dow's gone from 17,350, where we got a sell signal in the Dow. We've gone down 400 points, had a little bit of a bounce late yesterday and today. We're underneath the 9-period exponential moving average. So that now the translation of this is that it's the daily chart leads the weekly chart. The weekly chart leads the monthly chart. And because this is really a very important moment in my work, let me just move over to the monthly chart, to the weekly chart over here. In this particular weekly chart, I've actually, on this particular one, I've kept all the notations. So I'm going to open it up a little bit so that you can see what I'm looking at. I'm anticipating that there's a good chance that the stochastic, which is at 84%, is going to pull back. If by Friday, the Dow is trading underneath 16,000. I'm going to give it a little bit of room, 16,920. In other words, if there's a close, there's a real good chance that this is an arch formation, and it should be pulling back into the month of October. If, in fact, the Dow closes by Friday in the 17,220 area, anywhere around there, then I have to say, okay, there's enough residual strength to run a little bit higher in the month of October. So I've got my levels very clear there, but yeah, I'm moving it across, and I'm going to show you something really interesting. I'm going to open this up. And this is the monthly chart. And as you can see, my prediction this morning was that, well, for a few days, is that there was a really good chance, and this often happens when you go into 1 week to go for a monthly chart to close. If there are signs to say that the closing price is going to be near the opening price, and in this particular instance, the Dow opened the month of September at 17,097. And we're trading right now at 17,066.
Right.
So this candle is going to be very important for a number of reasons. If there's a close in October below the low of this month, 16,934, it says that you should have another at least 2 weeks in November of a downward move, and that's going to be the test, because at that point, 6 weeks' time, this should either be a reflex rally with residual strength to go to new highs. If you fail to do that, that's going to be a sign to me to say that finally the consolidation is unfolding, and then 16,588 would be the level to watch on the Dow. So for my subscribers, for the last, I think when we last spoke last week, I said that we're quite short. We're one of the most short positions we've had, but it was really based on the daily chart. It's really interesting to me that I based all the activity that we've got. We've got two stocks short and a number of indices short, as well as a sentiment indicator. In fact, the VIX index is running very sharply. That's a sign that the big traders, that's the heavy lifters, this is most probably the mutual funds and the hedge funds, they're starting to put money into the volatility index to kind of garner a little bit of insurance. This is the first time that there's been this kind of a rally, sustained rally in the volatility index. So I had to go from the daily, and I actually have to wait a whole another week until Friday, this coming Friday, before I haven't even got a sell signal yet in the daily, in the weekly chart. That's not, I've got a sell mode in the daily, but I haven't got a sell signal yet because it hasn't closed under the 9 EMA, 9-period moving average. So I'm just going step by step, and this is the only way I can do it, because this has just been a brutal market to be short for 4 or 5 years now. So we've started these positions. So far, they're working very well. The day is young, we'll see. But I have to tell you that this is the first time look at Ford. I mean, Ford's pulling back. General Motors, General Electric's pulling back. There are some signs here to say there is weakness, and it's coming in certain sectors, coming in quite strong.
Listen, folks, you can test drive Basil's newsletter by coming over to our website at TFNN. Go to newsletters, trading newsletters, the opening call, test drive it 30 days, absolutely free. Basil, have a great night, safe night. Look for the show tomorrow.
Thank you very much, Tom.
Coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 2. You get the NASDAQ flat. S&Ps are also flat. And you just heard that promotion, folks, for the Tiger Real Estate First Mortgage Program. If you happen to be in the Tampa, St. Pete, Clearwater, Orlando area, coming this Thursday night, I'm going to be doing a dinner presentation at the Bel Air Country Club. You're welcome to come. If you go right in the front page of TFNN under Breaking News, you'll see the presentation will be from 6:30 till 8 o'clock. What we'll go over is that we'll go over the actual properties, the contracts that you'll actually have. The way the program works, folks, is that we are paying 5% on a 4-year balloon mortgage that has a value of 70% loan to value of these properties. If you happen to be anywhere in the world, you can go right to the second first mortgage program, secured investment, under Breaking News, and I did a little video right there. So you can check it out right in the front page of TFNN.com. You know, we had Bill Gross, PIMCO. Bottom line is that that departure from PIMCO had a lot of different things going on simultaneously. And what we are going to see is this. So PIMCO, folks, was under investigation, is still under investigation from the SEC, and what that investigation is about is that the investigation was about the aspect that they put into one of their funds assets that they got at a discount, and so whoever was in the fund got bigger profits than they normally would have got. When that happens, the question first is, where did they get the assets? More than likely they got the assets out of another fund. What come out today, and so you get a picture of something. The SEC, basically had these allegations 2 weeks ago, 3 weeks ago. Well, they've been investigating it for 5 or 6 months. They came out 2 or 3 weeks ago. PIMCO, Bill Gross leaves. Today what come out is that in 2013, one of the fund managers got fired because he went to the SEC with this information that, in fact, he got fired because he went to a supervisor saying, hey, they are basically getting discounted assets, putting them into the fund, and making like the fund made more money. Well, check this out. This is intense. So the trader filed a suit against PIMCO. Already had told the SEC. The suit got pulled 2 days later, and the trader, guess where the trader is, folks? The trader is now in Montana, and he owns a great bar. So needless to say, you can speculate how much money he was paid by PIMCO to get out of town, go to Montana, get a bar, but yet, the bottom line is that they're not out of the clutches of the SEC. And I suspect this story is only beginning. It's definitely only beginning. Because what you have inside funds in general, folks, is this, especially bond funds. Bond funds, folks, it's conservative money. People want to make sure they get their money back, but they're always playing with 1%, 2%, 0.5%, very small increments. Bottom line is that fund was up about 30 to 40% more than the other bond funds. And bottom line is that this deal has only just started. Our man, Mr. Andy Hecht, is wondering if Paulson still owns gold. And oh, yeah, he owns lots of gold. If we go over and we take a look at the GLD, right now he owns 3.97% of the GLD, or 10,234,000 shares. Big number. And in fact, if you want to see something else, he's got holdings, him and this other guy, in Nova Gold. This is a big speculation play they're playing on this one. In Nova Gold, this guy, Electrum, I forget the guy's name, Electrum Strategics, he owns 25% and Paulson owns 11%. They've already made their money in this one, though, I suspect, because what happened is that, let me just see something, because I know when they bailed Nova out at the 2008 low, yeah, and that was 33 cents, and then Nova went all the way back up to $15. So you can see, you talk about a trip. So check this out. So Nova Gold was at $19.70 at the high in 2007. It goes down to 33 cents, 2008. Goes all the way back up to $15.25 in 2010, and now basically it's at $3.04. The other big holding that Paulson has is Ashanti, Anglo Ashanti. Right now he holds 6.7% of that. Oh, hey, check this out. You know what? If I had Brian Sullivan's email this morning, I would have emailed him. Check this out. I forgot about this. eBay. Someone knew this is going to be a trip. eBay, folks. So eBay this morning broke in two, right? Guess what? When I bring this up, this will blow your mind. Deutsche Bank, let me pull this up. Deutsche Bank bought here it is right here. Deutsche Bank filed, Deutsche Bank filed last night for 39 million shares, 3.17%. I'm trying to figure that whole deal out. I was watching this morning. And if you are watching Tiger TV, what you're seeing, there's the filing date, and it's the full amount. No, it's not the full amount. Their latest change was they bought 33,333,085 shares. Were they lucky? I don't know. That one, though, is a heads-up extraordinaire. That's very unusual. They don't know more than anyone else, but position-wise, you talk about buying at the right time. Oh, my God. That's about as good as you can get. Some of the high-volume stocks, and I believe we're going to have a low-volume market out here today. Ford is down 36 cents. That's not bad for what it was. Move.com is getting taken over by Fox. That's up about $5.60. You have GoPro up again. Oh, my God, up $2. That's GPRO. This is just incredible. This is going to be the classic. Okay, so it's up. No, GoPro. GP. This is amazing. So GoPro is up $2, trading at $93.07. And the float is the same. So right today, we are at a 41% short position. And let me see what the options are going for. So premiums, yeah, premiums inside the options are almost 10%. Wow. 10%. This is like 10% for this month. Oh, man. Do not go short GoPro, folks, because what's going on with GoPro is that it looks like, to me, this can go to, where the heck's it going to go? 42. This is sick. 72. Well, it's getting close. Okay, let's do it this way. 93 was 163, 73, 83. So it's like $18. 77, 87, 97. It's getting close. It's like $9,700. And our man Dave White, our technology expert at TFNN, is telling me that the lockup is December 23rd. Hey, Merry Christmas, Happy New Year. This is going to be intense. So watch this. What a lockup period means, folks, is that bottom line is that insiders can start selling. Can you see them right now drooling, thinking every single day? We'd all do this. I mean, this is like a no-brainer. Think about this. Think about you get 1,000, 2,000 shares. And in August, that 1,000 shares, we'll just stick with 1,000, right? That August, they were $38,000. Today, they're $92,000. And you can't sell them. Bottom line is that, you know, when they can sell them, it's going to be the first one out. Now, what is intriguing is that depending on the larger players that have more money, I suspect are already putting collars on this thing, because you can put collars on them even when you can't sell them. What happens with that collar, however, is that you have to have money until the stock gets released in order to get the collar on. You know, so you're risking that pure money going up, meaning putting that bread up until that takes place. And yeah, there's no doubt what Dave's saying in the den right now is saying, okay, I remember KKD. And I remember this so well because I remember how many calls we used to get on the air with Krispy Kreme. Krispy Kreme only went one way. And the amazing part about it is that it blows my mind it's even back this far. In 2000, it started out at $5.25 and just went straight up to 46, then dove to 26, then went back up to 49, and then never looked back. That was 2003. 2003, that blows my mind. It's like 10 years ago. You know what's so funny about that? No, it's more than that, isn't it? Yeah, it's 10 years ago. Because you know what's so crazy? I remember this one guy, and I'm sure I'm hoping he's still out here growling a problem with us. He just wanted to buy it so bad at this highs. And I'm saying to myself, man, you know, and I don't know if you bought it or not, but certain voices at certain times you just hear, you know, and that voice I can still hear. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow's up 1, Nasdaq down 4, S&P's are flat. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials up 2, NASDAQ down 6, S&P's down 1, And volume-wise, let's take a look at it out here. We right now on the NYSE are dealing with 570, which will come in around 650. And the NASDAQ you're dealing with 1.7. That will come in at about 2. So you get a sideways move out here. I suspect what you're going to see out here, folks, is that we'll get another slight pop into tomorrow, and then my take would be to shot the heck out of it. If we go over to Asia, we take a look at Asia last night. We have a Hang Seng went south again, 1.2%. Where the Hang Seng's trading right now at 22,932. And you get nice volume behind these moves, by the way. Last night and the night prior to that, we did 2.1 last night and 2.2 billion the prior night. What that sets up is that it's going to grind its way down to this 22,100, and we'll see whether basically it wants to trade below that. Yeah, well, actually, you know what? Yeah, that's where it's going. It couldn't bust higher; it's going to bust lower. This consolidation in the Hang Seng has been there since 2010. So the bottoms are wide open now for a test. The first bottom is 19,426. You come into that with juice, and then you have the bottom that was established in 2011, which is 16,150. We go over to the FTSE in London. We take a look at the FTSE. She is, so the FTSE looks like it's going to be the first one to break out. Break down, rather. FTSE right now, yeah, she's got action. So FTSE's going to go attack the lowest swing point of 65.28, another 100 points down. We're 23 right now. The largest swing is still down at 6,500. And if she breaks that baby, it's not the end of the world. Looks like the FTSE wants to trade down to 6,100 anyway. It's another 500 bucks down. We'll see how it gets down there. The DAX in Germany, what you have with Germany, Germany sideways market out here today. Germany is a classic, meaning it's coming into its downdraft from July with much lighter volume. We came down in July, and it came down with 131 million, 141. You got back up there with 106. They're coming right back downtown again. Put this on a monthly basis. Oh, interesting. The DAX has quite a way that they can go down. The DAX looks like our NASDAQ and our S&Ps. I mean, it's gone straight up for 3 years. 4,600, yeah, it's doubled. It's at 100% up. Doubled with no juice. So your first leg down sets up 8,100. It's a big number on the way down, but that's your first leg down. The XLF. Let's go take a look at the financials out here. Financials still going sideways. No big deal out here on the financials. What we do have is that you had the identification last Thursday. That's the first time the financials had any juice. That was on the way down. I expect it's going to build some more cause to get down into lower prices. The oil and gas sector just got smoked. I had another expansion with volume today in the XLE. We are at 90.77. That's making its way down to this 88.520. It's amazing that the actual equities inside there, you know, they're all red, but they're not that killed in the context of oil being down $3.50. You have Exxon only down 14 cents. Schlumberger's off 132. Apache's down 261. Let's go over to Schlumberger for a second, because Schlumberger in general does a huge amount of business. Well, they do 7% of business in Russia. That's this year. But Schlumberger, Schlumberger wants like 94. It's not the end of the world. You're at 101 right now. But what you will have, yeah, this is going to be a problem for them. Their revenue is 7% in Russia right now, but what you do have, folks, is that Russia has big plans for the Arctic, and, you know, Schlumberger, Halliburton. I think Halliburton, though, if you remember, this is what was really strange. You know, Dick Cheney used to be the president of Halliburton, and then what ended up happening is that, okay, so Halliburton's still in, yeah, no, Halliburton's still in Texas. I thought they moved their headquarters a long time ago. Must have been another part. It was Boots and something. They had moved another part of that offshore. Yeah. Walmart, we go take a look at Walmart. Oh, hey, so check this out. Let's go to Google first, because what you are going to see is this. The fight, folks, G-O-G-L. This is where the fight's going to come down. This PayPal, the separation of PayPal and eBay is going to have a nice little fight going on. Because the key would be, you get Alibaba coming into the U.S. strong. Alibaba is huge. Alibaba has their own pay deal going. You get Apple with Apple Pay. That is going to make inroads. And you know what's interesting? They're definitely going to make some inroads, because when you go to all the at least the Wells Fargo ATMs, it has them right in front of them now, Apple Pay coming, coming, I think, in like 3 weeks. So when you take a look at Google, guess what? All Google really needs is the aspect of having, a payment system. They have Google Wallet right now, and, Google Wallet's fine, but it really has never caught on. But what you do have is that I expect the speculation is going to come down as to who's going to go after PayPal. And what very well may happen, this is where it could get really intriguing, is that before they even split it off, I'm sure that this investment bank is calling eBay right now saying, hey, we will buy this for Google, one of them. Google would be the natural fit to buy eBay. We look at the IWM right now. The IWM is 152, 46 million shares traded. And the IWM, folks, is the only indice that what it has done is that it has got into the February 5th lows already. That was 107.27. That was in February. When it came down in May, it got to 107.44. And right now, that also is leading the way down. What I do expect you're going to see, that is the weakest indice, but this S&P, the NASDAQ, they still want to do a little bounce. When you bounce on light volume, sell the heck out of it. Volume comes into it, then don't sell it. It'll go to the highs. This is Tom O'Brien. This is TFNN. Don't forget, folks, if you happen to be in Nadex contest, make a trade out there, because you'll be eligible for the 5 $100 cash prizes that we give away every day. You stay right there. Come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine that it is already there. And, folks, if you happen to be in a virtual trading contest, this is the week that we're giving away $10,000 in cash. If you come over to our website at TFNN, you're going to see the virtual trading competition leaderboard right. You'll see the spelling right on the front page. You just hit that. You'll bring the board up. And what you're going to see is that just from yesterday's trades, the winner thus far has $25,000 profit in the account. Right down to $5,000 profit the first 10. Each and every trading day, we announce 5 separate winners of $100 in cash, plus 1 Art of Timing the Trade, the Ultimate Trading Mastery System. And right now, we're going to go over to one of our winners out of the 5 today, Dennis Honig from Ontario. Hey, Dennis, how you doing?
Not bad. Yourself?
I'm doing great, man. Well, congratulations. We appreciate you participating in the Nadex contest. So have you traded this Nadex platform before?
I have, but I didn't really understand it that much. I'm just starting to get the hang of it, actually.
Well, the good thing is that you're out there trading it, and we appreciate it, and we will send you that $100 cash out ASAP, along with one of my books, The Art of Timing the Trade, and we want to thank you so much for participating.
Awesome, thank you.
Okay, so how long have you been listening to TFNN?
Actually, I just heard about the TFNN just last week before I entered the contest.
Oh, I love it. That's so cool, man. That's awesome. And so, are you in California or Canada?
I'm in Canada.
Canada. That's a beautiful thing. Well, we get a lot of listeners in Canada. So, you a hockey fan?
Oh yeah.
Oh yeah,
of course.
totally, man. Yeah, I know. I like that. Well, we get hockey season happening, man. We got action, no doubt, right?
Yeah.
No doubt.
Yep.
Well, listen, man, we appreciate you. We welcome you to the TFNN family, and I believe that we already have your address, and we'll get that right out for you. Okay, Dennis?
Okay, thank you.
Thank you so much. Have a great one, man. Have a safe one. And remember, folks, that if you have participated and signed up for that contest, all you have to do is trade once during the day. Every day it's different, these 5 days. So you have 4 more days. Today you're going to have 5 winners, 5 $100 winners. Tomorrow, Wednesday, Thursday, and Friday. And then, of course, on Friday, we will, well, actually, it'll be on Monday, we'll know the winners. First place winner is going to get $3,000, second place $1,500, third $750, 2 $500s, and then 5 $250. Market-wise, let's take a look at it out here. We had the Dow Industrials down 28, NASDAQ off 12, S&P's off 5.5, gold contract down $9.20, trading at $12.0950. Now, if we go over to the gold and we take a look at gold, this is what you have. Gold takes out the low of Thursday, has volume, but yet it's still lighter volume. Has 173,000 versus 186. Rejected the price at this point, which was the 1206.60. That's the smaller issue. The larger issue, which the gold contract is doing, is that it's pushing into the GC. It's pushing into the June as well as your December 2013 swing points. That's what it's doing thus far. The June swing point is 1179. And the December one is 1181. The highs of those, we are coming into them with lighter volume, but the bottom line is that it's basically coming into them. Those swing points break, and then that would be heavy trouble for the gold market. My take on this is that 1179 is what it takes to get gold out of the ground. You spike that and stay under that for a substantial period of time, maybe even 20, 30 days. Bottom line, a lot of companies will go out of business. Silver got smoked out here today in an extraordinary way. Actually, if we just take a look at these commodities in general, you had the gasoline, rebarb. Okay, folks, we are going to be paying small money for gasoline. Gasoline today, unleaded, was down 4%. Crude oil was down 3.3. Silver was down 2.9. Heat and oil was down 2.1. So all you folks up north, in the Midwest, as we come into the winter months out here, you're going to be saving quite a bit of money. It looks to me, unleaded right now is at 258. It looks like it's going to go to 225, 235. Crude oil down 91, 85 is game. Silver is in trouble. Silver right now is at $17. Silver broke out its lows. Gold hasn't done that yet. I mean, silver was down 3% today. Gold was down only 0.8%. So we'll see where this whole baby is going to shake out. But needless to say, inside that commodity market, there was some destruction. And what is that all about, folks? Good old King Dollar. So if we go over to King Dollar, and you look at King Dollar, what you have is this. King Dollar gets to a price point today of $86.33. Now, check this out. King Dollar, in 3 months, folks, has gone from $79.80 to $86. That's an unbelievable move. That is like, so what, that's, yeah, that's 8 points. That's almost 9.5%. For a currency, that's insane. You know, hey, listen, I mean, the bottom line, I think King Dollar's going to basically go to 89. So, you know, that's on a longer period. Right now, they're extended. Euro has gone from a price point of 139 to 126. And now you can see how much closer and more realistic is that the euro can actually get to par, which is just amazing. If the euro breaks this 120 area, is it 120? Yeah, 120. It's going to be 120 to about 118. You break that area, and guess what? It's not even par that you're talking about. You're talking about 81. And if that's the case, it's going to be really intriguing what does happen with commodities, because it's more expensive. Well, it's less expensive for you and I, because what you have is that you have the aspect that we do business in the dollar. Countries across the world, as their currencies go down, even though commodities are going down, bottom line, they can spend more money for the commodities because their currencies are that much weaker. Bond market is just an ever-ready bond market, folks. This thing will not back off. It looks like we've just set up another ABC structure on the way up. Your A point on the 10-year is 120. Your A point is 123.16, and your B is 124. Let's say 125. So that's 2.5 points, which will get you to 127. That's the last highs up there. Yeah, see, this 10-year, man, is going up big time. Right now, we're 2.5. 30-year, same setup in the 30-year. What you have with the 30-year, that refuses to back off also. The 30-year is at 138 right now. That's going to run up to 140. Longer term, both of these want dramatically higher price. And in fact, if you want to look around the world, and this is the correlation that you have to look at, folks. You have to look at, there's so much, picture this. You got one world. You get all this funny money, okay, because it's all fiat money. And it's all looking for a place to sit and stay warm. Well, you can go to the United Kingdom right now, and in the United Kingdom, you're going to get 2.4% on the 10-year. Guess what? You go to France, you get 1.2. Germany is only 0.9%. Italy, which is broke, is 2.3%. Spain's 2.1%. So you can see that correlation. Even though you may think that our rates are low, our rates are high. And if you do the percentages of how high they are, they're dramatically higher. If you go from France to the United States, our rates are 150% higher on a 10-year, which is just amazing. And the fact is, what you also have there is that you are in the dollar versus the euro, and the euro's going down, the dollar's going up. And bottom line is that is what is driving our rates not only to stay low, I suspect they're going to get a lot lower because of the amount of bread that's going to basically continue into this market. This is Tom O'Brien. This is TFNN. 877-927-6648. Some of the high-volume stocks in this low-volume market. You got Apple up 64. eBay was that they're going to break into. That's up 397. GoPro, that just doesn't stop. That's up 276 at 93.70. You stay right there, folks. Come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 28, NASDAQ off 12, S&P's up 4, and as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Hecht. Don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday and Thursday, right after I'm off, 5 to 6 Eastern Standard Time. Now, all the programming at TFNN, folks, you get it right on your cell phone. Just put TFNN.mobi in the browser. All the audio plays 24 hours a day. We have live content from 8 in the morning to 6 in the evening. Andy is on Tuesdays and Thursdays. He also has a great newsletter. It's the Technomento Commodity Report. The way you get it, come over to our website at TFNN, go to the very top bar. You'll see newsletters, trading newsletters. You'll see the Technomento Commodity Report. Test drive it 1 month, absolutely free. Andy Hecht, what's going on?
How you doing, Tom?
Doing great. You having a good day out there?
Yeah, everything's good. You're so like the Tom Petty and the Heartbreakers song, Free Fallin'. That's what's happening to silver, huh?
Yeah, not only just silver, man. I mean, look at gasoline.
Yeah, I mean, oil got whacked today, but as far as falling through, all levels of support, silver, I put a monthly chart up here just to show we're at the lowest level since March 2010.
Right.
We broke that 18 and a half. We got down to 1685 today. On a daily chart, I'll pop a daily chart up there. Yeah, this thing,
it's serious
since July
business.
10th, this thing has been a one-way street, free falling.
There's no doubt.
No doubt. Look, it's the strong dollar.
Yeah.
We're seeing it in silver, we're seeing it in oil, and I've been preparing kind of today's the end of the quarter.
Right.
So, I guess, in my mind, I think, stocks were kind of maybe a little juiced on the close here to get a good quarterly mark-to-market, for the fund managers and so on and so forth. And tomorrow will really tell us the direction. But right now, with the strength in the dollar and everything, this whole commodity sector, unless there's real fundamentals behind a specific commodity, like we see in something like coffee or in cocoa, all bets are off here. They're going to move with the dollar.
Okay, so that's good. I want to get that out of you, okay? Because what I'm trying to figure out here is this. So check this out. So let's put a dollar chart up. No, I want to put a copper chart up. I'll start with a copper. What happens here, folks? I want to do a few of these because it really doesn't matter what you put up. And I'm going to put up a long-term one, right? Because this is going to be absolutely amazing, and this is where my question is going to be to Andy, right?
Sure.
So picture something, folks, is that the dollar was strong like bull for years. The dollar went from 121 down to 70. And that was the beginning of the great bull market in commodities, period. Okay? So now what the question is, when I look at the dollar wants to go to 89. You break 89, you go into 121. So what's happened is that I have a long-term chart up. And I got copper up to stop. We'll put gold up, so we can put them all up, okay?
Copper's great because copper's the one that diagnoses the entire commodity sector, in my mind.
Okay.
So copper's great.
So if the dollar, let's say, we're talking long-term here now, folks. And long-term, when I'm saying the dollar, it looks like the dollar wants to go straight to 89 right now. If that's the case, it'll back off. But within another 2 or 3 years, the dollar will be 121. So if that's the case, the question would be, is copper really going to go to $1.42 and maybe to 70 cents?
Well, no. No. My short answer is no.
Okay.
And the reason for that is, A, demographics. There's a lot more population today than there was back then.
Okay.
China is building infrastructure. Listen, they're not growing at 7.5% this year, but they're still growing.
Okay.
The base prices for these raw materials are all higher. Listen, we have a massive corn, soybean, wheat crop this year. This happened 10, 15 years ago, the corn price would be $1. The wheat price would be $1.10. The soybeans would be trading at $4. The base prices for all these commodities are higher. And my thesis is that it's demographics, it's population, it's wealth growth. Everyone competing for, finite commodities. There's only so much corn you can grow each year. There's only so much gold you can pull out of the earth each year, so much copper. So the base prices are higher. Now, I also believe that right now at current price levels, some of these things are overpriced based on where the dollar is. So I think we have slippage in a lot of these commodities, and we have some room on the downside. The only commodities I'm liking these days are the ones that have real deficits behind them. Yeah. If I look at precious metals, I'm friendly to the platinum group metals because they are in deficit.
Right.
I'm not friendly to gold here. Right. I'm kind of waiting for that to break down. Silver, Tom, silver for me is so tough as a fundamentalist. I love production cost. I love to understand it. For me, silver has no production cost. You got these copper, lead, zinc, tin concentrate producers who will sell. That's 70% of silver production.
I understand that. Now, gold has production cost, though.
I'm sorry?
Gold has production cost.
It does have production cost, but also
gold is not a byproduct. The one thing
that drives gold is demand and investment demand, and if that backs off, you might take a dip. I'm waiting for a bargain. I think gold 1045 or so is a bargain. I want to load the boat. But right now, it's going to be very hard for gold to pick its head up given what's going on overall with the dollar. And in terms of a longer-term scheme, I think the dollar goes back to parity against the euro, just for the reason that you said in the last segment. You did a beautiful job outlining how much interest you can get in all of the competing markets.
Oh, yeah,
Why wouldn't you put your money in dollars? Not only are you going to get more interest, but you're going to get capital growth, too.
Yeah, there's no doubt, man. Yeah.
You got to be crazy to put your money in German bonds now.
Right. No, it have been for a while. Right. No, there's no doubt. Right.
Right, so that's so supportive to the dollar. And unfortunately, a strong dollar, and, look, when they first introduced the euro, I forget the year, it was like in the 90s, I think, it was 80 cents to the dollar.
No, I remember it, 84 cents, man. I'll pull it up right now.
84 cents.
Yeah.
Right, it's run all the way up to 140.
Right.
And now, now for good fundamental reasons, it's pulling back. It should be at parity. Now, currencies don't move that way. This move, this quarter in the dollar, it's down it's up about 8% or so. That's insane in terms of volatility in currency.
I know. Isn't it wild?
That's insane, man.
It is.
I think the biggest move we ever saw in currency markets, if you remember when Soros attacked the pound?
Yes. Yeah.
That was like earth-shattering because it wasn't so much the move, it was how quick it happened.
Right.
This is unfolding pretty quickly.
Oh, this is insane. This is great. I mean, but it is fast and furious. There's no doubt about it.
No question about it.
And folks, this is what's so wild about this. The way we're at the end of the month right now. So watch this. When I set up a continuous contract and I put the dollar on the continuous contract, you don't get just one big bar, folks. If you get a bar, this bar that we have. Technically, okay, we have just gone from 82 to 86. Well, these things like to hang out together. Do you know what I'm saying? They
Absolutely.
Yeah.
Hey, there's something else that I wanted to add to this discussion.
Okay.
Can I hang out for
stay right there.
seconds?
Absolutely. This is Tom O'Brien, Andy Hecht. Our phone number is 877-927-6648. Don't forget, folks, if you are in the Nadex contest, get over to TFNN. Make that trade every day. You might be one of the 5 $100 cash winners every day. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking about our man, Mr. Andy Heck. We are talking commodities. And don't forget, folks, right after this program ends at 5 Eastern Standard Time, our man Andy is going to take you over 5 to 6. Get everything right on your phone at tfnn.mobi. Okay, what are we looking at here?
So I wanted to just talk. You brought up a great topic, which is kind of the long-term macro look at commodities.
Right.
And I wrote an article for Seeking Alpha. I put it out yesterday, and I put it in the Den. It's called The New Commodity Kings, How the Commodity Markets Have Changed This Year.
Okay.
And what the article really talks about is how, because of legislation and all that, the banks in the U.S. were pushed out of the commodities market.
Yeah.
And now a group of Swiss and Asian companies control those markets, which I think is very short-sighted because, A, the regulators can't regulate them over there, and B, if they make a lot of money, the U.S. tax collector doesn't get to participate. But be that all what it is, there's a case study in there, and the case study is about iron ore. And iron ore prices have been falling terribly.
Right.
I mean, they're below $80 a ton.
Right.
And the big iron ore producers, BHP and Rio, and maybe Valley, they can produce this stuff at very cheap cost. So what they're going to do is they're going to produce more, push all the high-cost producers out of the market, and when the market comes back, they're going to control the markets. We're going to see a lot more of that. And even with something like gold, Tom, yes, a lot of production cost is here or above. But if the price falls, those producers will fall by the wayside. Right. And when it does come back, because it will, because of the problems of fiat currencies and all those things, the strong companies will be stronger. I think we're going to see a lot more of this in commodity markets because the U.S. regulators are going to have their hands off these markets because they're going to be run by a lot of Swiss and Asian companies that are buying infrastructure, buying pipelines, buying warehouses, buying production. We're going to see a lot more of this.
Yeah, well, it would be definitely interesting to see out of the companies inside the gold market, what would be the strongest ones? It's certainly not going to be the biggest ones because the biggest ones are, basically almost at their 2008 lows right now.
Exactly, but they can also survive a brief dip down to 10.50. It's not going to be. No.
I understand that. Yeah,
it would be ugly.
Yeah.
But they'll come back strong. And you know what? When gold makes its next leg up, someone else will go and explore and take out this higher cost production. That's all. The commodity markets are so efficient when it comes to kind of basic economics, Tom, with supply and demand.
Right.
These things fall. We saw it in coffee last year.
Well, that's why I really like the market, really. I mean, because the reality is that just that you said, like your technical commodity report, is that, guess what? I mean, whatever it costs to make a commodity, yes, they can go underneath it, but not for long periods of time. Because
exactly.
It just doesn't work like that. Yeah.
It doesn't work like that unless you substitute. I wrote another article, a little tongue-in-cheek. I also put it in the den. That one is called, and that addresses a market that has dosed. The agricultural enigma. Will low grain prices lead to high times in the Farm Belt? And, it's kind of tongue-in-cheek, but I'm saying, hey, the most expensive cash crop in the United States is marijuana. And if you're growing corn, soybeans, and wheat now, and the prices are so low, you got to look for something to plant next year that is going to yield some more money. And given all the states changing their laws, it's very possible that some farmers will go in that route.
Oh, a lot of farmers are going to go on that route. There's no, I mean,
Absolutely.
What? It's legal in 22 states right now. It's going to be legal in the whole country.
I even have a trade suggestion there. In intercommodity spread, Tom, when they start trading marijuana futures, I tell everyone, short those and go long grains. And I think I end the article with something like, That's funny. Smells like a great trade.
Oh, you are funny. Well, the aspect, though, that what you're talking about, one of the other big things I think that will be out there is not just the marijuana, the actual hemp, and not to smoke it. Do you know what I mean? Hemp always is.
Oh, yeah, because, I mean,
that was a big deal.
Was one of the crops that you date back to the 1700s, and the pilgrims who came here grew hemp.
Well, when I was a kid, man, I mean, when we sailed, everything was hemped.
Hemp ropes.
Yeah, it was. Yeah. I mean, you never could break them. And I don't know what the history was, how this thing changed, but I remember, the aspect now. Then all of a sudden, farmers couldn't grow hemp, and there's hemp clothes and all of that stuff. So there's plenty of things I suspect that is going to basically come into play here.
Absolutely, and I did some research for the article. And a recent Gallup poll showed that 7% of Americans are regular users. That's 22 million people. So where there's demand, there's supply. And in a way, if they ever legalize it and it does trade as a commodity, you know what? Tax revenue takes it out of the cartels. Well, I don't know if it's necessarily a bad thing.
It's definitely going to happen. It's happening right now. And there's a lot of different reasons. I mean, number one, it should happen because the fact of the matter is you can go drink a bottle of scotch and get out of your freaking mind, and, pot's not going to kill you. The aspect
how many barroom fights occur when people are smoking pot?
Yeah, and then you can get to the medical marijuana, and you can argue, and people argue left and right, you know what I mean, that, it's good for you, it's bad for you, but the people that really need it really do need it, and it really helps them.
Absolutely. Absolutely. But, the farmers in this country, particularly the small ones, are suffering now. I mean, some of them can grow maybe sorghum or something like that, maybe oats, which are a little bit more bid. They still come down, but they don't have a lot of choices to keep their farm. And when you have a farm, you have land. You have to employ that land, and you have to maximize it. Right now, given what's happening in grain land across the Farm Belt, they're worried about next year. So it's going to be interesting.
So let's talk cattle. So we got we're at $1.63.
Every dip, Every dip in 2014 has been a buy in this cattle market.
This is pretty intense, man.
It's intense. We got up to almost $165 a pound today. The feeder cattle's up to $235
Hey, let me ask you something. When we're looking at these prices, so it's $163 a pound right now. And is that a pound, and we're talking about the whole piece of cattle or a piece of it? Is that like the whole cow?
No, that's the whole live cow.
That's what I mean. So that's really expensive, man.
And there's a lot of waste in that
Exactly.
cow.
That's why I wanted to know. Okay,
There's hoof in there, hoof and snout. So when you get that drill down to Chateaubriand, you're talking big bucks.
You're talking big bucks, no doubt about it.
Yeah. I mean, look. steak is basically a 73% premium to pork.
Okay. Okay.
So, you know, consumer choice will kick in there, but, you know, this thing is wild. There's a shortage. It's going to be alleviated because if you're an animal protein producer here, with these grain prices, man, bring it on. I want to grow my herd as big as humanly possible.
Yeah, no, I can see that. Hey, I want to switch gears for you on a second, right? Because, you know, you live in Vegas, right? And what's going on right now in Macau, China, is that, see, folks, the way that these companies make so much money is that they're all gambling junkets. Well, 73% of the money that comes into Macau is gambling junkets. And that business is still there, of course, but it's getting basically broken down somewhat between the United States and China and fraud and all of this stuff, right? But what my question would be, what is the business like in Vegas right now?
You know, it's not. It's better than it was after the 2008 problem.
Yeah.
But it's not reaching the highs that it was. They're seeing a lot of people. A lot of the kids still come here. The club business is really good.
Big. Yeah.
But the slot revenues and the table revenues are not great. The big companies have been making all that money over in Macau.
Yeah, no, I know. You know, I was cracking up, folks, and you may or may not know this, but this is pretty wild. So Shelley Allison, folks, who is the CEO and owns basically Las Vegas Sands, and this guy is the character number one, but the reality, when I was reading this article about China and the junkets, bottom line, what a lot of people don't know, and I know this because I used to sell his product, okay, is that he was one of the big junket guys, you know, for Las Vegas.
Yeah.
He was out of Newton.
He's just using that same business model.
Listen to this, folks. This is amazing. He had this company, GWV Travel, and it was a charter out of Boston, out of Newton, that basically would go to Vegas. And then what he did one day is that he realized he's sending all these people. It was cheap money, man. I think we used to buy half the plane like at, I don't know, $2,000, and then he'd let us sell it at $3,000 or something. Do you know what I'm saying? It was. But they had planes going. Of course, in Boston, there's so many gamblers, right? And New England, and it was cheap money. But then what he did, folks, and this is what made him. He turned around and bought it wasn't even, it was the convention center, and he named it was a hall, and he named it the Comdex, and he made Comdex. And then it went from the junket to, you know, real business. But what's cracking me up when I was reading the story about Macau, that's the same thing that's going to happen in Macau. All the junkets, all like the mobs guys are going to be out. It's weird.
Absolutely.
How, yeah.
And the big thing here is now, I can tell, they've cut the minimums at the tables.
Oh, yeah. Oh.
That's telling me it's not that healthy.
That's good. I'll have to come visit. Hey, man.
All right.
Look forward to the show in a few minutes. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. You had Big Blue up 19 cents. McDonald's was down $1.41. Exxon was off 38. You had Oxy down 101. Walmart was up 39. Cisco is up 24. Now let's go over to our man Mike in Thailand. Hey, Mike, what's going on?
Hey, Tom, how are you?
I'm doing great. How you been? Man, you sound like you're right next to us. That's a beautiful thing.
I'm sure that won't last too long, but thanks. Thanks for the good news for at least a few seconds here. Tom, a couple of things. I just bought TZA on the close. Do you think that was a bad move?
Well, I mean, I'd wait for a pullback. You know what I do, but it's not the end of the world. I mean, you have that swing point it's going after, which is 17.15, and you know it's closed at a tie, so he'll go after it. I mean,
the reason. Go ahead.
No, go ahead.
The reason why I did it is the Russell. I was watching it all day, and today's one of those rare days. Instead of listening to you in the morning, you know, the tape. I had to listen to you live, but the Russell just fell out of bed in like the last 15 minutes.
At 15, yeah, it did. What Mike's talking about, folks, at 15:50, 10 minutes of 4, what happened is that someone threw 5.8 million shares at the Russell. That's 10% of the Russell. They just dumped it. Yeah, so that's there's no doubt about that, man. It took the Russell, folks, from 100.81 down to 109.81 to 109.35, and yeah, no, I can see that, right?
I'm glad you told me that. One more question on the dollar, if you have time.
Yes.
I can't believe a smart guy like you. I mean, this dollar to me, I mean, it just keeps rocketing higher. It's setting off an alarm. There's a crisis coming. There's something really bad. There's something really big coming up. And yeah, what do you have to? I mean, what do you think about that? I mean, I think these markets are done now. I think we're going into. You know, if we don't go into a substantial drop, we're going into an even bigger drop. Something really bad is coming down the pike. What do you think?
I think we're already in a crisis. No, but it's not, you know, yeah, the market wants to pull back, but worldwide we're in a crisis, and that's why the dollar's going up. You know, the dollar, you know, okay, so if you go to Russia, Putin basically will take everything, right? You go to China, forget it. You know, you can make a lot of money, but you got to get out. If you want to live in a city, you're going to die from, you know, the exhaust, okay? You go to South America, you know, Argentina's going to default. Venezuela, you have nothing. You go to Europe, Europe's getting overrun, man. Europe's toast. So you go to the Middle East and forget it. You're going to die, you know? So we have a problem. We're in the problem right now.
Yeah, it's the world's reserve currency, and then... And whenever they get the dollar going up like this, whenever they got a crisis that's getting ready to happen for PR reasons, they knock gold and silver down every time this happens. I've been watching it for 40 years. You know what I mean? Or over, you know, like 35 years now.
Yeah.
Every time the market gets ready to really break, I mean, go into a crash, they send that dollar sailing higher and they nail gold. They just take it apart because they want that dollar to shine. Do you see? They don't want people running the gold during the crisis.
Yeah, no. Listen, I understand what you're saying. I guess one of the biggest things here is going to be, you know, the aspect. You know, that's why I was asking you, India, earlier, because see, if you take the dollar, folks, and you know the way this is trading right now, I can make a case it's going to 92.30. Okay, and if you go there with strength like this, like we are, guess what? You know, because we came down so fast from 121, you know, this will be 3-4 years from now. But bottom line, it can get up to those prices again. So you know what? So that would be the bullish case. The bearish case right now on the dollar is that the move has been way too fast. You know, when you have a fast move like this, more than likely you will hit the 89, but it will exhaust itself and pull back for another year and a half, and then make the run again. But
and that's just what scares me, Tom. And you've been right on with the dollar. And every time you keep saying every time in the past you're saying it's going higher, I'm like, he's going to be wrong. He's going to be wrong. But you've been right on this dollar going higher every time, and that's getting me scared. And you're right. I think I think we're going higher.
And listen, I know what you're saying. In the context, what I'm still trying to wrap my head around is that I know what the production cost is for gold, but the fact of the matter is I know they can smoke it underneath that. And in the larger aspect, though, if in fact that is the longer term game, you know, and that game, see, to me, Mike, that's not a contrived game. The world is going to the dollar right now because they know that, you know, we have it made over here. In the context of the rest of the world, we have it made. That's the real bottom line. And, you know, you might not like certain, you know, so, you know, it's going to get stronger. And we don't have a lot of competition. That's the other side of this. The competition isn't out there. What is a problem, I think, that we all have to face is that, you know, and I've said this many times, we just can't sit here and sit back and think you can sit back and, you know, have a six-pack and all this stuff, and we're going to be untouchable. It's not going to happen. Do you know what I mean? So,
yeah.
It's an aspect that we all got to basically keep our heads up and keep working.
Well, Thanks a lot for taking my call, Tom. Thanks for your time.
Have a great one, man. Have a safe one.
You too, buddy. Take care. Bye.
So, market-wise, folks, what we have out here, well, this is where it's going to get interesting, too. It's like, what I'm trying to figure out right now, you know, the market for years hated a strong dollar. Then the market loved, basically, you know, a weak dollar. Well, the dollar's gone up and the market hasn't got touched yet, you know. So these large turns, and I feel like this is a large turn in the marketplace. The reason being is that the high volatility that we've had in the marketplace, that is an indication that the turn is much larger. And much larger, in my case, would be that, okay, you're making that turn, you want to go downtown. The real question is, okay, how far downtown do you go? Well, the first place downtown is that February 5th low, folks. That's what it comes down to. So, you know, if we go back over to Exxon, if you just want to see how it's making its way into that February 5th low, and with Exxon making its way into that low, folks, it's a heads up in an extraordinary way. You know, the February 5th low out here is, the high of the low was 97, and we're already at 94. The low is 89.25. Exxon right now is at 94.05. You got the expansion of volume because we have the monthlies right now. It's subtle, but you got it. Exxon made a high with 189 million. He just came down with 231 million. So the numbers are there. You stay right there, folks. A man, Mr. Andy Heck, is going to be coming up, growling a problem with you. Always remember, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here. You stay right there. Andy's coming right up.